Hello viewers, welcome to my channel. Britain is facing its worst rental crisis. The Bank of England has compounded UK's housing market trouble by increasing interest rate on 50 basis to 5% in June 2023. The housing market hit hardest by the recent Bank of England hike in the interest rate. Millions of the mortgage holders and renters are feeling the brunt of it. The rent in the UK increasing alarmingly on average about 10% year-on-year basis. Renters have been feeling the pain of rising mortgage rates as landlords across the country continue to attempt to recover their costs of mortgages by increasing rents. Moreover, the rents have exploded across the UK since lockdown restriction eased in the summer of 2021. When worker returns to cities, international students came back to university, and overseas travel restrictions were scrapped. Rents have been rising significantly for the last year. The pressure of rising mortgage rates faced by landlords, as well as higher demand for properties than the number made available, have combined to raise the cost for tenants. The average rent on newly let home in Great Britain was up 9.1% in May compared to last year. London saw the biggest annual increase with rents rising by 13.1%, followed by Scotland 11.6% and the North 9.2%. The average cost of renting a room in UK has increased to more than £700 a month for the first time. Annual rental inflation for new lets is up to 10.4% year-on-year, with rents taking up the highest proportion of earning in a decade at 28%. Rental inflation running in double digits for 15th consecutive month. Rental cost as a proportion of earning reached highest for a decade. It has grown faster than average earning over the last 21 months. According to property portal Zoopla, the average UK tenant now spends more than 28% of their pay before tax on rent. It means people are spending more of their wages on rent than at any other time in the last 10 years. Average rent for new lets have also escalated, jumping 10.4% in a year, making it harder for people to afford places. Rent have been growing faster than wages in the UK for nearly 2 years. That has meant in the majority of the UK, affordability of renting has been at its worst for a decade. Rent now typically accounts for 28.3% of income compared with 27% on average for the past 10 years. A small rise in percentage term can still have a significant effect on people's finances. The proportion of income taken up by rent varies in different regions. Even in London, where rent has previously taken up a bigger proportion of wages, the cost is account for 40% of gross earning, the highest in the UK. Landlords are making their lowest profit for 16 years as interest rate rise. 13th consecutive increases in the Bank of England's base rate, matched by rising mortgage costs, were putting the squeeze on landlords' income. Total mortgage borrowing stood at £58.8 billion, down 23.6% in a year. The bank also recorded a rise in people falling behind on mortgage repayments. An ongoing chronic imbalance between supply and demand continues to push rent on higher across all parts of the UK. Rental affordability is currently at its worst. Renting in London is the most expensive of all regions, averaging 40% of gross earnings. The longer rent rise faster than earnings, the greater the affordability pressure on renters. This will ultimately start to impact demand and the pace of rental growth. June 2023 saw the cost of rent across England rise for the 6th consecutive month. The cost of rent rose in 7 of the 8 regions. The average cost of rent per property in England is now £1,148, up from £1,111 in May, a 3.3% increase. The biggest rise in price was recorded in the southwest, where rents jumped 9% in June, rising from £1,092 to £1,191. The highest prices are found in Greater London, where the average cost of rental property is now £1,965 per month. Private rental prices in UK grew by 5% over the year to May 2023. This is the largest annual growth recorded for the UK in ONS series, which goes back to January 2016. There is now growing concerns that the supply of rental homes could get even worse as high mortgage costs hit landlords and make buy-to-let investment less attractive, or in some cases economically unviable. The situation for renters is already dire. There are about 5.5 million private rental homes in the UK. More than a third of these households spend half of their take-home pay on rent, which is considered severely rent burden. Evictions due to rent arrears reached the highest on record going back to 2009 in the first 3 months of the year. According to the generation rent analysis of the government data, while no-fault evictions jumped to the highest since 2017. Reasons why rents are skyrocketing. Rents have been rising significantly for the last year. The pressure of rising mortgage rates faced by landlords as well as higher demand for properties than the number of made available have combined to raise the cost for tenants. So far, the string of bad news for landlords has meant too few new properties coming on to the rental market. The popularity of buy-to-let mortgage pumped the number of privately rented homes to double from 2002 to 2015, according to Zoopla. But since then, the number has remained largely flat as tenant demand has increased. Net migration in UK reached a record high in 2022, was 600,000 people, most of whom will look for rental home. The surge in migration may have increased rent by 3 to 7%. A huge number of people moving into the rental market from overseas was behind the bulk of record rent growth recorded across the UK over the last year. There is no sign the rent could be subside because the Bank of England is consecutively increasing the base rate. Consequently, the mortgages and rent are increasing. Besides, the net migration is on the rise as the UK government needs more workers in each sector. Similarly, high cost of labor and material substantially altered the supply of the houses. Moreover, UK's sticky inflation squeezed the demand for housing. The looming crash of housing market could be avoided if Bank of England pauses and later reduces the interest rate. The government may take effective measures to keep the mortgage rate. Besides, UK's government should incentivize the housing market through subsidies, amnesties, and promote public-private partnership in order to increase the supply of the houses in the economy. Thanks for watching. Please consider like and subscribe my channel.